between the interbank and the parallel market. I think that stability is also important for the data that I think we will see going forward. The third thing is also that we have started to see a fall in the rate of inflation, although it's still very high, but we have started to see a fall in the rate of inflation. All this stability should have meant an improvement in business environment, improvement in business investment, and I'm sure within the next quarter and the third quarter of 2017, we should begin to see all those bear out in the data that will. And so that's the outlook that I expect to see, yes, in the next 3 months to 6 months, yes.
You organize economic breakfast meetings and you publish your thoughts of your organization, Time Economics, as far as the economy is concerned. What will be the driver for this level of optimism that you have in the economy moving forward?
Well, I think the key driver is that in the year 2016, okay, I think the key driver of the poor economic conditions that we saw in 2016 was so much uncertainty, volatility, and the low oil prices. The key drivers for the outlook for 2017, even though oil prices are not high, but they are stable. Even though the exchange rate is, we are seeing exchange rate realignment, it is stable in the last 3 months. And also inflation is falling. What this tells us is that people that are looking into the Nigerian economy will begin to see a semblance of stability. And people that have been delaying their investment, perhaps since 2015, will see reason to invest at the moment. So these are the things that will drive the slight improvement in the economy. Does that mean we are going to start seeing 4%, 5%, 6% economic growth? Not quite yet. But however, we have started to see improvement, and the data that we are seeing now is starting to bear us out. In the second quarter and in the third quarter, I expect that the improvements that we'll see will be stronger in the second quarter, and the data of the third quarter and even the fourth quarter, except there's any major shock in the economy during this year, I think we'll see improvement all through. Are we going to see anything near 3%? I don't think so. However, I think the second quarter we should be out of recession. The third quarter we should see an improvement also in growth, and also in the fourth quarter of the year.
Well, the central bank will be deciding about lunchtime, after lunchtime today. Hope we've all had lunch before those decisions are made. But a lot of the analyst consensus, including Bloomberg, was that the central bank will do nothing as far as the key parameters are concerned. What's your take?
That's my assessment as well. And I don't see any reason why they should do, it should still be do nothing. Let's understand where we are. It's been very positive for us in the last, since the start of the year. It's been very positive. If you look at the exchange rate, the inflation, if you look at signs of improvement in the economy, and also even from the policy perspective, there are gaps in the ERGP, but at least everyone understands where the direction that the government wants to go. So these are all improvements. However, I think the MPC this afternoon will retain the rate at 14% for 3 reasons. One, as a matter of precaution, because the figures we are seeing, though improvement, it is still very, very weak. That's one. I think the second reason why there is because to continue to attract portfolio investors. And I think the third reason is that inflation at over 17%, though falling, is still very, very high. So I think it will still be do nothing this afternoon.
And finally, as far as the 3 new executive orders signed last Thursday by the acting president, President Oshibajo, is concerned, what's your take about how these 3 executive orders should work out, perhaps to support your positive outlook moving forward over the next second half of the year, starting from the Q2 where we are?
Well, those executive orders, although I prefer to call them executive directives, I'm not the outlook I have for them is not necessarily in the next 3 months or to 6 months to see what happens in relation to those directives. I am more interested in the longer term because this is about the business environment and the executive orders relating to the ports, the second one relating to procurement, and the third one relating to the budget process. They are very, very important, and I am glad that we want to go in this direction. However, these are not new. These are not new measures. I mean, meaning that it may be new for this administration, but previous administrations have tried to do this. So why have they failed in the past, and how can this government now succeed where others have failed before them? I think the most important thing that is different from past administration is the level of engagement of the acting president in this case. I think the level of engagement is strong. For instance, is meeting with middle-level paramilitary and civil servants to explain what these executive orders are. So I think that is very, very important. However, I think it is too early. And even in the next 3 months, it is too early to judge the implications of these orders on the business environment. I think you should invite me sometime next year or in the next 18 months to talk about it. And we'll see if they've been able to successfully implement the measures contained in those orders.
Dr. Ogo Okiti, Economist and CEO at Time Economics, thank you very much. Stick around. Don't go away. We need you within the hour. We hope you have such enough time to spare with us on this very important day with the GDP out on the street and the MPC decisions after lunchtime. Stick around. Ogo Okiti, who is an economist and chief executive at Time Economics, he's live to us from our Abuja studios. It's a very, very busy day. What's the market's talking about as we speak? We have about 1 minute to go on break, but the stock market is a little bit positive early today. According to the Twitter account of Stockman Nigeria, says the feeling in the market is to hold as we speak. Mixed sentiment is on as speculators reduce exposure. Yesterday, you saw the stock market down on Monday, the first day of the trading week. Everyone keeping an eye on this GDP and the MPC decisions that will take place later today. Stocks may open lower today and sustain that trend. That's the figure, 0.1%. We're still holding, however, to the 9.7 trillion naira, about $32 billion at the stock market. Very interesting day. We'll squeeze in the currencies when we come back after the break. But commodities will be king. We'll have a lot of this to put together for you.